Warburg is dropping $217 million on Maneesh Pharmaceuticals, just the non-tuberculosis drugs.
Brilliant carve-out. Strip out the infectious disease risk. Keep the steady cash flow.
Steady? Regional pharma margins are brutal right now. They're just buying a headache.
I read the footnotes, Nate. The margins on these niche drugs are spectacular.
Almost as spectacular as Blackstone trying to buy into the global cricket league?
Wait, really? Private equity cricket?
Oh yeah, but first we need to talk about an $8 billion Boeing deal. The rundown. $8 billion for airplanes is one way to expand a regional network.
Vietnam Airlines is not messing around, but honestly, anytime I see an $8 billion Boeing purchase right now, I just want to read the delivery guarantees in the fine print.
Spoken like a true skeptic, but it shows serious confidence in Asian travel demand. Speaking of Asia, did you see the LY Corp move?
$201 million to become the largest shareholder of Kakao Games.
Right, the analysts are spinning this as Japanese corporates aggressively seeking diversification to offset domestic macro uncertainties, which is bankers speak for the yen is weak and they need growth anywhere else.
Exactly. But South Korean gaming is a brutal market to buy into. I want to see how much control they actually get for that $200 million.
Well, speaking of control, Trian and General Catalyst are trying to force a close on Janus Henderson. $52 a share in cash. They are calling it their best and final offer.
I hate that phrase. Best and final is almost never best and rarely final.
Oh, come on. 52 is a totally clean exit. For an asset manager in this environment, the board should take the cash and run.
No way. You don't publicly stamp a letter best and final unless you are sweating. If I am the Janus board, I am calling their bluff. We will see how they respond tomorrow.
I bet they fold, but fine, we will track it. What else is on the radar?
Advent is picking up a majority stake in Salt and Stone. Private equity just cannot resist Los Angeles body care brands right now. Oh, and Home Depot is buying Mingledorff to build out its SRS platform.
Classic bolt-on, very clean. But the rumor mill is where the real fun is today.
Let me guess, Blackstone.
Blackstone evaluating a major stake in the global cricket league.
Private equity buying cricket. The sports asset bubble is officially out of control.
Hey, 1 billion people watch it. The math works.
The math always works on the pitch deck, Nate.
Fair point. But if you want to talk about math that actually works, we need to talk about what Warburg Pincus is doing in India.
$217 million for a Pharma carve-out. I read the filings on this one, and the structure is fascinating. The big one.
$217 million for the parts of a pharma company that don't do the one thing the company is famous for.
Exactly. Maneesh Pharmaceuticals makes its name in tuberculosis drugs, and Warburg Pincus just wrote a very large check for literally everything else.
I actually love this play for Warburg. They get a massive footprint in Indian healthcare without having to buy the whole platform at a massive premium. 1,800 crore rupees for a carve-out is classic private equity. You buy the neglected division, pump it with capital, and watch it grow.
Neglected division or just the leftovers? Because I read the deal structure. Maneesh is keeping the TB portfolio. That is their absolute cash cow. Warburg is basically buying a grab bag of generic formulations and niche therapies.
Okay, calling it leftovers is harsh.
It is a carve-out of the non-core assets. Have you ever tried to untangle a pharma supply chain? The shared manufacturing agreements alone are going to be a nightmare. Warburg is going to spend the next 2 years just figuring out which vats belong to them.
My inner banker is screaming right now because you are completely ignoring the macro thesis here.
Enlighten me on the macro thesis, Nate.
Private equity firms are absolutely starving for specialized healthcare assets in the region right now. Everyone wants a foothold. Warburg just bought a fully operational, regulatory approved pipeline. They bypass the entire startup phase. Sure, it is messy to untangle, but that is why they get it for $217 million and not $500 million.
I will give you the valuation argument. It is a reasonable price on paper, but I am inherently skeptical of a seller who says, sure, buy my business, but let me keep the absolute best part.
It is like buying a pizza, but the seller gets to keep the pepperoni.
Yes, and Warburg just paid over $200 million for the crust.
Hey, some people really like the crust. Stuffed crust is a premium asset.
You are ridiculous. But seriously, look at the broader healthcare market. This isn't happening in a vacuum. We are hearing whispers that Gilead Sciences is closing in on a $2 billion acquisition of Uro Medicines. The big players are throwing serious money around.
Which proves my point. Warburg knows how to scale these assets. They have done it before. They will build a new management team, rebrand this Maneesh carve-out, and probably flip it to a strategic buyer like Gilead in 5 years.
We will see. I want to see the margin profile on these non-TB drugs once they actually separate the overhead costs. Maneesh is the real winner here. They get to streamline operations and pocket a massive cash infusion to double down on their core market.
Win-win then. Warburg gets their niche healthcare foothold. Maneesh gets a clean balance sheet.
A messy win-win, but sure, I will buy it for now.
Speaking of messy situations, we need to talk about the standoff happening over at Janus Henderson.
Oh, the Trian and General Catalyst offer.
$52 a share in cash. And they actually put the words best and final in the press release.
Which, in my experience reading these filings, usually means it is neither best nor final.
Exactly. Hold that thought. We are going to break down the math on that boardroom drama right after this. Voices. I was reading this note from a prominent tech investor this morning. They are calling the AI boom a double-edged sword. Massive growth potential, but also a massive valuation threat across the entire sector.
A valuation threat? Oh, come on. That is just venture capital speak, for we paid way too much last year, and now we need a systemic excuse for our bad math.
It is not just an excuse. Look at the multiples. If you buy a thin AI wrapper company for 50 times revenue, you are going to get completely burned when the foundational models inevitably eat their lunch.
Sure, but the real threat to most of these deals is not AI. It is basic economics. Look at the other macro note going around today. Dealmakers are finally waking up and flagging trade tariff volatility as a top-tier risk. In Australia, it actually just spiked to the second highest concern for the entire year ahead.
Australia, really? Second highest?
Yes, because physical goods crossing actual borders still matter. A tariff shock ruins your operating margins a lot faster than a chatbot ruins your software moat.
Fair point. Speaking of physical assets, how about sports? Did you hear the whisper about Blackstone today?
Please do not tell me they are buying a professional pickleball league.
Better. They are reportedly evaluating a major stake in the Global Cricket League.
Wait, really? Blackstone doing cricket?
Private equity wants live sports. It is the only thing people actually watch in real time anymore. The media rights cash flow is incredibly sticky.
I guess I need to learn what a wicket is. Or is it a pitch? I will check the footnotes on the rules.
You do that. But before you buy any cricket pads, we have some actual public market drama to watch tomorrow.
Right. Trian and General Catalyst just dropped a best and final offer for Janus Henderson. $52 a share in cash.
Best and final. The three most dangerous words in any negotiation. We will see exactly how the Janus board calls their bluff tomorrow morning. Spill the tea. I'm telling you, Blackstone, looking at the Global Cricket League, is the most predictable private equity pivot of the year.
Predictable? It's wild. They're looking at a major stake in a sport that most of their New York partners don't even understand the rules of.
You don't need to know what a wicket is to understand media rights, Maya. Sports assets are the ultimate non-correlated yield play right now. Every buyout shop wants a piece of the live entertainment pie.
Sure, but the valuations are getting absurd. It reminds me of the tech investor warnings we saw this morning about the AI boom. Everyone wants the massive growth potential, but the valuation threat is just a giant double-edged sword right now. You're paying for perfection.
Speaking of paying for perfection, what are the whispers you're hearing about Gilead?
Oh, the Uro Medicines rumor. Yeah, my sources are saying Gilead is closing in on a massive $2 billion acquisition.
$2 billion? For Uro? Oh, come on. That's pure desperation. Gilead is just trying to buy a narrative because their organic pipeline is stalling out.
I actually completely disagree. $2 billion is a steal if you read the footnotes on Uro's Phase 2 trial data. You're just being a cynical ex-banker about this. They have a completely novel mechanism of action.
I'm being a realist. Like $2 billion for a company that was valued at half that a year ago. It's AI halo effect nonsense bleeding into healthcare.
Aro isn't even an AI company, Nate. They're pure biotech. You're literally just projecting.
Fine, maybe I am. But you know who definitely isn't playing games with valuations right now? Nelson Peltz.
Oh, the Trian drama.
Exactly. Trian and General Catalyst just dropped a best and final offer of $52 a share for Janus Henderson.
52 in cash. The board has to respond to that tomorrow, and the math on that premium is fascinating. We should pull up their proxy filings next. Tomorrow's radar.
So tomorrow morning, all eyes are on the Janus Henderson board.
Trian and General Catalyst dropped that $52 per share offer. They explicitly called it best and final.
Which is banker speak for we might find another $2 in the couch cushions if you beg.
No, I actually believe them this time. The math gets completely ridiculous past 52.
Come on, you know there is always wiggle room. Anyway, keep an eye on Blackstone too. Rumor has it they are circling the Global Cricket League.
Wait, really? Cricket?
Private equity loves sports assets right now. It is the ultimate sticky recurring revenue.
I just can't picture Steve Schwarzman explaining a wicket to his LPs.
That is a pitch deck I would pay to read.
We also have SJW International launching the sale process for Gold and S tomorrow. Korean EdTech is suddenly drawing massive regional interest.
Assuming buyers don't get spooked by trade tariffs. It just spiked to the second biggest deal killer concern down in Australia.
We will see whose bids actually clear the inbox by morning. Catch you tomorrow.